now that you know about the threats that affect the implementation of the fundamental principles, and you know the safeguards that should be applied when these fundamental principles are being threatened, right? The way your exam questions are will be asked is basically in a case study format. So they will not ask you the threats, the safeguards independently. They will ask you most likely as a case study question. So you have like a case study where they are saying that this chartered accountant has received an instruction from their boss to change figure, and you should outline the ethical issues that are involved. You should outline the threats that will arise, maybe because of the relationship that already exists, and then advise on the safeguards that should be implemented to basically um to like manage the situation in this case. So it's already what you know, but it would just be good for us to go over a question together. So let's check May 2024 question 4 and 5. So I'll just go there. Okay, are we ready? Let me look at question 4 and then this question 5. Okay, so I want somebody to read. We're just going to take question 4 and 5. Professional responsibility. Okay, so I'm with you. Okay, anybody can unmute and read for us. Demi Global, can you see my screen?
Yes, you can see us.
Hello.
Yes, you can see your screen. I can see your screen.
Answer this question last.
We treated this question now. We treated this question last.
Okay, so let's
Yes.
just move on. So let's just move on then. Okay, thank you for the confirmation. We'll just move on to the next topic.
Sorry, ma. I thought you wanted to draw our attention to questions on ethical guidelines now.
Yes, that question is a full question on ethical. So they've told you this question is a question on ethical conflict resolution. They said discuss the extent to which you are responsible for fraud, advise the auditor on how to close expectation gap. See this question 5. They are saying what's your legal position, discuss the requirements of care. So when I say they will ask you the fundamental principle, they may not ask you all the fundamental principles. They may choose one, the one that is being affected in the case study they give you, and then they ask you to respond to that particular responsibility that the auditor has, and then the safeguard you should have applied. So the reason why I'm emphasizing on this is because, like I said last class, that's what happens. You can say, oh, I've treated this topic, AAA, you are moving on. So then get to the exam, and then they will come back and say, oh, the tutor did not teach me this one. And then the tutor is like, yes, we treated it, but we did not treat it in a case of this is how you should respond to the question. So as much as you have done these topics, you need to open up your mind to all the possibilities that exist in this topic and how the questions can come out in different form. Okay, so that's what I just want to, that's what I'm encouraging. Okay, so in today's class, we're going to move on to audit approach. We're going to move on to audit approach. Now, like I said earlier, the course has been divided between me and Mr. Desalu. So there's some topics that he will take, and there's some topics that I will take. So this is one of the topics that I'm supposed to take. So we'll just move straight to it, audit approach. Now, this is talking about the audit strategy, the different forms. I will not call it types. I will say the different forms at which the auditor can carry out his audit assignments. Okay, so as an overview, there are 4 major audit approach that the auditor can take. There are 4 major audit approach that the auditor can take. Number 1, I just want to go straight there before we start analyzing. The first one is the business risks or the risk-based approach. This is where the auditor does the audits by focusing on high risky areas of the audits of the financial statement and carries out his audit from that point of view. So he basically performs the audit based on the risk elements or the most risky areas of the audit. That is where he starts, he measures his audits from. So he basically audits from is the system-based approach. The system-based approach is when the auditor is auditing from the internal control. That means, and this one can only be used when the internal control is relatively strong. So if the auditor believes that he can rely on the internal control of an entity, he will perform a systems audit, because if your processes are intact, the numbers will be intact. The numbers respond to your process. Hello? Can you hear me?
Hi, we can hear you, ma.
Okay, I thought somebody
We can hear
unmuted.
you, ma.
Can hear you. Can hear you.
So the numbers respond to your processes. They respond to the procedures that you have outlined. The third one approach we have is the substantive testing approach. This is the one that we apply in Nigeria. This is where items of the, you do a overall, like you do an overhaul of the financial transactions. You are checking the numbers, right? And this is being carried out when you cannot rely on the internal control of the entity. In Nigeria, we always assume that we cannot rely on the internal control. So they will just do a substantive test. It's a very detailed test where you carry out like analytical procedures on the transactions that have been listed on the financial statements. Then the last one we have is the SOFP approach. It is like carrying out your substantive test, but it is peculiarly for small entities. And SOFP approach is like 100% audit, because these entities are relatively small and you are able to test 100% of all their transactions. So you see these 4 approaches, that is what is in this chapter. And best believe, I think it was a diet. Yes, I wrote my diet. They asked us this 4 approach. It was number 1 question. I think we'll look at it. 17 marks. It was like a 1-line question, something. See, we wrote, you will write and you will tire. So, but the way it is, they just asked it randomly. Students were wondering that what's really asking us, and that is why in AAA you need to calm down. If we were in physical class and I told you to touch your neighbor and tell them that they should fire ballet, you calm down when you are doing AAA. So I wanted to go first to that place so that you know what the cocoa is of this chapter when it comes to exam questions where they test. Okay, so now that we know what audit approach is and basically the 4 major audit approaches that the auditor will use, let's now go over the chapter from the beginning. Okay, so audit approach is directed to the gathering of relevant and reliable audit evidence to support. Please give me 1 minute. Okay, so audit approach is directed to the gathering of relevant and reliable audit evidence in order to support the expression of an audit opinion. When the auditor is carrying out an assignment, he understands that it is his responsibility to define the terms of the engagement. When you do practice management, you talk about engagement letter and how the auditor is the one that will say, on this engagement, this is what I'm responsible for, this is what you're responsible for, right? He also has a responsibility of familiarizing himself with the client's business, the organization, even their industry, right? He obtains preliminary understanding of the principal's features. You guys, my network, I just finished a class and my network was really acting up and I was really praying that it doesn't happen here. But if for some reason you can't hear me, somebody should just unmute and say they cannot hear me, okay? So let me just move on. So he carries out a preliminary understanding of the client's account system. He determines that based on this record, which strategy should I adopt? So based on this, he now does an evaluation of their internal control to check that, okay, can I rely on the internal control, their procedures, now that I understand their process well. If he has critically assessed that the controls are weak, right? He will now, if he decides that, okay, the control are weak, he will just say, okay, I know that I can't place a level of reliance on these controls. He will go for substantive test. But if he does the initial test and he says that, okay, I think I can place some level of reliance on this client's records, he will now still subject the other samples that he did not subject to another test just to be sure. If in the second test now realize that, oh, it's just the front ones that looked good, the inside is not good, he goes back to his substantive testing, right? But if he is able to detect that there are weaknesses in internal control, he will now, that is where he gives recommendation based to management based on the controls that he has identified weaknesses on, right? So he will report on the weaknesses and break down on internal control with the management in a management letter. And based off of this, that will now help him to know the kind of approach that he will use to carry out like his overall audit work. So he will now set like the scope of the audit. What is supposed to be determining the scope of the audit is these three things: the nature of the audit, the timing of the audit, and the extent of the audit work. The nature, the timing, and extent is being covered in the scope of the work. After he has checked the internal control and he can say that, okay, I can't rely on this internal control, I need to perform substantive tests. Okay, so moving on. Determination of the audit approach. The purpose of determining an audit approach is to enable the auditor familiarize himself with the client's business and organization, as well as to obtain preliminary understanding of the client's accounting system. This will entail the preliminary identification of those internal controls on which he proposes to rely upon. The auditor should determine, this material is very interesting to read, by the way. The auditor should determine and record his audit approach before commencing any detailed audit work. In doing so, the auditor will identify the optimum balance between relying on the control or reducing the substantive test, or on the other hand, placing no reliance on the internal control and seeking audit satisfaction from other validation processes. Okay? I'm just talking, but let's continue. The basis of this assessment is basically, it wants to just make sure that the audit is carried out in the most effective manner. Okay. It's also very important that you use an experienced staff, somebody that knows about that industry, somebody that understands the peculiarity of the need of that client. Because like we said, due care, there's no standard definition of what is due care. If somebody has headache, you must be able to give them paracetamol. If somebody has running stomach, you must be able to give them, if it is flagyl or something. And you cannot say because you use paracetamol in one place, paracetamol must always work. Your clients can sue you that, oh, you did not take care of me. This was the illness I had and you did not directly solve my illness. So to avoid that, what they do is to particularly make sure that your strategy focuses on the need of that client. However, so let me read this paragraph. In particular, the determination of the audit strategy for a new client will usually require considerable more time and effort than for an existing client, except where circumstances for the existing clients have changed significantly since the last audit. However, this does not mean that a formal okay, you can, if you are speaking, unmute and speak. Oh, I don't. Charity, I can
Yes,
hear
ma.
you.
Sorry, I've been raising my hand since the part of
Okay.
audit. When you were listing the 10 audit approach, but I don't think
Can you guys hear her?
meant it.
Yes,
Yeah.
we can hear her.
I think this is my
So,
network now. Can you guys hear her clearly?
Yes.
Yes.
ma, can you hear me now? Hello.
I can hear you.
Okay, it's just an observation. I don't know if it is only me, but I feel like she's fast. Then again, the audit approach from the other tutor, I remembered when he said that the audit approach has to be line by line, step by
Me
step.
out. Can you guys hear her clearly?
I can hear
Yes,
her.
we
I
can
can
hear
hear.
Okay.
her.
Charity, do you want to go again?
Yes, ma.
Sorry, my network threw me out.
Sorry, ma. So, my observation is on the audit approach. When you were explaining the 10 audit approach, you were, I don't know, but You were a bit fast. And based on how the other lecturer told us that when we get to audit approach, that we have to learn it step by step, because you cannot interchange number step 1 to step 2. So, but then though I have my material with me, I was following you. But if you ask me if you ask me the number 3, I will not even remember, because you were just reading it, like you were just explaining it to us. I don't know. And then again, I'm asking, is there like maybe a short word to use to know the steps? Like the other lecturer, he somehow gives us some short words to know each of the 10, like maybe if he's teaching something that has so many elements, so he gives us like a short word to use to know each of the
Like
key points.
acronyms.
Yes, ma.
So it depends on the chapter, right? It depends on the chapter. If we're in chapter 1, we're doing elements of an assurance engagement. We'll do ASHA. If we're talking about the fundamental principles, we'll use topic and things like that, right?
Yes, ma.
Depending
If
on
you
the
could
chapter.
reduce your pace
If a
to
chapter
15.
does, hello? Are somebody saying something?
Yes, if you could also reduce your pace, it's fast.
Oh, okay. Sorry, I talk really fast, like ordinarily. So I try. So that's why I said that if you have questions, you can just draw me back, or you can say, "Oh, you are being too fast." But I won't tell. I will work on it now that I've gotten the feedback. Okay. So we should start from the beginning again, right? Okay.
Thank you.
So you're an auditor. You have gotten a client. So working from the chapters, we did introduction, we moved to the regulatory framework, which is how do you conduct yourself in an audit? What are the things that are expected of you? What are the laws? Then you move to the next chapter that talks about the rules of professional conduct, which is where we did your how to conduct yourself basically, and then we move to the liability. Have you guys done liability, auditor's liability? You
We
should
did it
have.
last
Yeah.
class.
Okay. So now the next chapter after that is practice management. What you do in practice management is, okay, how do you obtain an engagement? Obtain an engagement is how do you get clients? When you get clients, how do you know about your clients? How do you make sure that you have gathered the relevant information about the client industry? Let's say you want to audit an agro-based client. You want to know about that industry because you audit different people. So you don't just accept the engagement, you want to know about that client well. So you are supposed to have access to their record even before the engagement starts. As much as they approached you to audit them, they're supposed to give you access to their records and all of that. So you do a form of like preliminary assessment of that client. Okay. So based off of where chapter 5 ends is where we're talking about engagement letter. So an engagement letter is what you send to your clients that, yes, I have accepted this engagement. Okay. They sign off. That engagement letter has the scope of the audit, the responsibility of this person, responsibility of this person, the client, and your responsibility as the auditor. Okay. So that is how we get to chapter 6, which is the audit approach. So I now said this audit approach is the strategy that you want to use to audit the clients. Everybody with me? Okay. Now, just so that we are not confused, I now went to the major 4 that we have. So it's more like doing a walk back. That we have 4 major approach. Like we're going to still go through all the chapters, but there are 4 approaches, 4 strategies that you can use when you want to audit a client. You can either use the business risks, where you focus on the high risky area. This one, we have not yet gotten to the point where we're talking about the exact procedures. I'm just telling you the key points, okay? Or you do a system-based approach where you are relying on the internal control, and that one can only be done when you ascertain that the internal control of that entity is strong, okay? I said the third one is the substantive test, and this is where you use analytical procedures. Why? The internal control of that entity is relatively weak. I was now saying that in Nigeria, we automatically do default substantive tests. Okay? And I said the fourth one is SOFP approach. It is like carrying out substantive testing approach, but for small companies. It is called like an 100% test of their transaction because it's a relatively small company. So small companies will not have internal control in place. So you just move on with your substantive test. However, I now said, I'm coming here because when you go to your exam question, this is what they are asking you. No, we can check November 2021 question 1, 17 marks. They asked them the 4 types of approaches. So I did that because I wanted you to put your eyes on the mark. Put your eyes where the question is. Okay? However, I now went back to start from the beginning of the chapter. So are we in a good place, everybody? Is this better?
Yes, ma. This is good.
Okay. Okay. So we now moved on to say this audit approach is basically everybody has an end goal, you understand, to express an opinion as to the truth and fairness of the financial statements. That's our end goal. However, how we choose to get to that end goal it varies depending on the peculiarity of an entity. The scope or the strategy is a game plan of action. The approach to which we audit will be based on that client. So if you want to know these steps, hook, line, sinker, it is familiarization that makes you to know the steps, hook, line, sinker. Okay? But let's go over it step by step. I cannot come up with an acronym for this because it is not an acronym-based subhead. What I would rather do is to play a scenario for you. Okay? So let's pick a name. Emmanuel, Ife, they are going to audit Beatrice company. So Emmanuel and Ife, they are going to audit Beatrice company. The first thing is Emmanuel and Ife will say, what is our responsibility in terms of this engagement? You know, there are different types of engagements. In your chapter 1, you would have done agreed upon procedures, compilation, audit, review, right? If this is an audit, what are the outlined scope and responsibility? What is our outlined responsibility when it relates to this engagement? After Emmanuel and Ife has understood their responsibility, they would not assume that, okay, because we audited Omowumi's company last month, that is the same way that Beatrice's company is. They will now familiarize themselves with Beatrice's company. That's the step 2. Okay? The step 3 is to now obtain a preliminary understanding of the principal features of their client system and their internal control. So it is the same way that you are familiarizing with your clients. But in this third process, you are basically, they call it like doing things like your ratios, your trend. You also want to understand that, okay, what kind of software do they use? What are the peculiarities of their business? Okay? Now, when you do this 1, 2, 3, it will now tell you that, okay, based on how I've evaluated this company, based on our understanding of the client's business and the peculiarity of their accounting system, this is the strategy that we want to adopt. Step 4. Are you with me? So you can see step 3 was a preliminary understanding. Why step 5 is now a detailed evaluation of their internal control. It's more detailed than what you did in step 3. So in step 6, you now, Emmanuel and Ify will now evaluate the aspect of the client system that, okay, he feels like, okay, can I rely? So, audit has different aspects. When you are auditing, there is cash and bank, there's receivables, there's payables, there are expense, there are different things that you are auditing. So you now check that, okay, which part of this record, which part of this financial statement can I even rely on what management has given me? You critically analyze those aspects. Are you with me? Emmanuel and Ify, that's what they are doing. They are critically analyzing those aspects. It is when they are now analyzing those aspects that they will now detect weaknesses in the internal control. So weaknesses in the internal control are called deviations. So internal control are the outlined procedures that management has put in place to ensure four things: safeguard of assets, compliance with with relevant laws, making sure that management procedures are being followed and all of that. And when it comes to internal control, we have different types of internal control: segregation of duty, organizational control, personnel control, acknowledgement of performance. That is like a chapter in skills. You understand? So if he assesses the internal control, he uses things like an internal control questionnaire. He asks questions to the staff in the organization or the people that they interact with closely. Okay, so based on his feedback, he is able to say, Emmanuel and Ify will now say, okay, these are the weaknesses that we have identified. Oh, you people don't have proper segregation of duty. One person is doing a transaction and completing it. So that means if he wanted to do fraud, he could have. You people don't have clear organizational control or management control. Why is this manager having approval? You said his approval is 10 million, but we can see his signature on transaction that is 100 million. Okay, so it is based on his evaluation now of the internal control that he will now say that these are the identified weaknesses. So that's why people will tell you that, okay, auditor, when the auditor come and there's internal control weakness, he will say it. However, we know from expectation gap that these things are not the auditor's responsibility. This thing is coming up as a result of his evaluation of the audit, like as a result of the audit work that he is doing. That is why all these conversations are coming up. So he will now discuss the weaknesses in the system with the clients. That, okay, these are the things that we are seeing. He's going to put it in what we call a management letter or a letter of weakness, that these are the identified internal control weaknesses. And one thing we know is that you as an auditor, when you come in the next financial year to audit them, am I still talking fast? I think I am. When you come to the clients to audit them in the next financial year, yeah?
No, yeah, okay, we are good like that.
Okay. When you come in the next financial year to audit, you start from their management reports. What are the things that they told you that are not intact as at the last year audit? Where are you with them? Okay, so that is step 7, Abi. Okay, so you report the apparent weaknesses and the breakdown internal control to client management in a management letter. Then, based on the result of the work you have described, you will now carry out a program of the audit work to substantiate the amount appearing in the account and related notes, so as to ensure that the account shows a true and fair state of the business and the result of the business. So you see, this step X is the reason for the audit approach. So that's like, since you know that you cannot rely on the internal control, you will now choose a strategy that works for you to be able to carry out that audit work. So picture this: I get a client. What does he want me to do? Familiarize myself with his industry, familiarize myself with his accounting system. Based on my temporary or arm's length relationship, I say, okay, this is the strategy that I think I can adopt. Ordinarily, audit should be it is better to audit the processes. If your processes are correct, your numbers will be correct. If your application of standards are correct, the numbers will be correct. So I come up with a strategy. I now start to assess their internal control. If the internal control is good to go, I can do what? A system-based audit. If the internal control is not good to go, I have to tentatively do either a risk-based audit based on the materiality of the items on their financial statements, or a substantive test where I'm saying that I have to subject a lot of their transactions to testing because of the weakness in their internal control. Okay, so those are the steps. As everybody together?
So, the step 4 is carrying substantive tests, right?
Step 4,
Yes, I got the other
determine
ones,
and
but
record. So I'm surprised that you are looking at the steps. I've taught ICAN class, and I'm not sure I've seen an exam question where they said, what is the step? I would tentatively open the pack for you and show you a diagram, right? But I have not seen an exam question where they're asking you for the steps. But just for
oh,
your use, yes. But just for your use, the step 4 is, I don't know how best to put it. Like, what strategy you want to adopt based on your external profiling of that client. That is step 4. Because you can see that step 4 looks like what you are also doing in step X. Do you understand?
yes,
Because you
ma'am.
have determined one strategy here. And when you come down and you see that you cannot rely on the internal control, you have to determine another strategy to be able to give an opinion as to the truth and fairness of that financial statement. Okay, that's why they will tell you things like checking for fraud and error, improving internal control. They are all secondary objectives of an audit, not primary objectives of an audit. Okay, so now that's what now leads us to the second paragraph, that is called determination of the audit approach. So what in this material is supposed to be, if your tutor is not with you and they give you the material, can you read it and pass the exam? That is what the material is for, right? It's just really good. I like to read it. You can read it. If you sit down, you calm down, you read it, you understand what they are trying to say. So the things they've already outlined in this up part is still relevant in being able to determine the approach that you want to use to audit their clients. Are you with me? Because they still said it here. Familiarize yourself with what? Client's business. Abi, obtain what? Preliminary understanding. Okay, then record your approach. In doing so, the auditor will identify the optimum balance between relying on the control and reducing the substantive test, or not relying on the control at all and doing his own substantive test to make sure that he meets his audit satisfaction using other validation procedures apart from relying on the internal control. Are you with me? Can I continue?
Yes, ma'am. Please continue.
Okay. The purpose of making this assessment is to enable the auditor carry out the audit in the most effective manner. So that was where I was trying to say that the thing about carrying out audits in an effective manner is that there is no one size fits all about due care. There is no one size fits all about due care. When I say due care, I mean professional competence and due care, okay, as a fundamental principle. Now, if you have said, okay, Emmanuel, if you said, we audited this company last month, we audited Dangote now, or we audited this other company, let's say they audited the bank, and now they are going to audit a manufacturing firm, And they're saying that, oh, no problem. It's the same thing now. We'll just do this percent of test. We'll confirm their bank balance. We'll do this. And after that, we'll be going. That would be wrong, right? So, like example, I work in a non-profit. And when it comes to a non-profit, when you even audit, the way they audit us is sort of different. And there are people that even specialize in auditing of non-profits. Okay. So that's what they're trying to say here is that's what they're trying to say here, that your audit strategy requires a level of professional judgment. And that's why they will advise that experienced staffs are the ones that do it. Okay. So, because experienced staff will most likely have worked with a client in that industry before, and they understand the peculiarity and the need of that kind of clients. Okay. Now, in this paragraph, we now moved on to talk about what about new clients. So they now, what we are now talking about next is that, okay, for a new client, more time is being required to be able to develop the strategy that you want to use to audit them. And this is because you still need time to kind of familiarize yourself with the circumstances or need of that client. They now said that the only reason why you will change your strategy for an existing client is if something about that client has changed from the last time you audited them. Maybe overhaul of accounting standards, changing of like the regulatory body that is responsible for them, or maybe they moved to a different region or something like that. So that is when you can do a change of the strategy that you use. And that's why I was saying something in the beginning of the class, that when an existing auditor comes, let's say you have audited somebody last year and then you are coming to audit them this year, you will start from the management reports. All the things I told you, where are you with them? That influences the strategy you will use for this current year as well. Okay? In overall, the audit strategy should focus on more efficient and effective audits. Preliminary work is to be done in addition to the real work of the audits. Okay? Now, what are the works that are required? You want to audit somebody. You have audited them before. Abi, you want to now check, do I change my strategy or do I continue with what I have previously used? Now, what are we checking? Stock taking, cash counts, debtor secularization. All these things are audit evidence terminologies. So if you don't know the meaning of these things, I don't think anybody should have issue. Stock count is counting their closing balance, abi, of their inventory. If they have physical cash counts. Debtor secularization, you send a notification to the debtors. This is what these people are saying that we are owing them in their reports. Kindly confirm this balance. It can either be a positive debtor secularization or a negative debtor secularization. So you will do it in review of the previous year audit working papers. Why are you doing this? It will remind the auditor of those matters that were brought forward from the previous year and any other points to be resolved in the current year, or the kind of problems to anticipate. Let's say you have audited that client 2 years. There was one debtor, his name was there. He was owing them 250 million 2 years ago. Last year, his name was still there. He was still owing them 250 million. You did secularization. He responded that yes, he's aware that he's owing them. In the third year, you want to start to have a conversation with the clients that how are you still like what CADA is this receivable still on? Are we still treating it as we need to start to consider if this is a bad debt? Let's say you from your evaluation, that company is having cash flow problem or they have a current lawsuit or things like that. So that is why it's very important to do an overview of the previous year work. Number two, you check based on the last time I audited them and right now, has there been any change in legislation? Has there been any change in the auditing standards? Okay, CAMA or any other standard that directly affects that client. Like now, with this new tax law effective January 1, 2026. So let's say companies that their FY cuts across 2 years, okay? 2024, 2025, I'll be 2025, 2026, okay? You want to say how exactly does this affect what we have previously been doing with that client, and you want to do what? Go ahead to review these changes and how it has affected the operations. Then analytical review, they said, is a review of the management account or other management information. This, like I said, is so that you can get things like your ratios, your trends, okay? For instance, the computation of the gross profit percentage of previous year will be an indicator of the reliability of sales and cost of sales. So you're not basically checking that this company that I left this way, where are they now? Because that helps you to be able to determine the strategy that you will use to audit them. So you check. This one is an exam question. Will tell you that when you want to, upon auditing existing clients, right? If there will be changes in the audit work, what will be the indicators? So you have things like change in legislation, maybe change in reporting framework, change in the management business, or key management staff being changed. Yes, there's a way key management staff, let's say somebody that did an overhaul of their whole management. You cannot assume that the strategy that you used to work for them the last time will be what you use. So like we said, changes in business or management changes in business. Example is the appointment of a new financial controller, or the establishment of a new business line, or the creation of a new branch. All those things are circumstances that will influence or affect the strategy that you will have for that client. Changes in an accounting system. Let's say they have a new procedure, a new software, things like that. That will also influence the approach that you will use. Deadlines established for the submission of the audit report. Where the client has set deadline for its statutory activity, such as the annual general meeting, is important for the auditor to work in line with such programs. So maybe the previous year, the deadline was a certain date, and in this new year, the deadline is another date. These one are even things that you will check before you even accept the work, because you don't want to collect the work and then it looks like the client is putting you under fire. Now, I would like to say something at this point. Most people that are in practice, sometimes they used to go to AAA and fail the exam. And the reason is because, I don't know, you guys are like 5 chapters in, right? Can you agree with me that AA in textbook is sort of different from audit in practice?
Yes.
Is it even
Thank you.
boring reading the textbook, Seth?
Eh?
Is it even boring reading the textbook, Seth? Very boring.
Mm, my volume is the highest, but it feels like I'm struggling to hear you guys. Someone should say something.
I said it's boring to read the AAA textbook, Seth. Very boring.
So it's not like it is so different. It's not like it's so far apart. But the textbook just shows you standard procedure. But anybody that is in practice know that all these things. If you want to audit this one, if you have audited this one before, apply the same. And that's what happens. And everybody's fine, everybody moves on. But this one is exam. Do what you can. Not do what you can. Do what is required of you to ace your exam. Okay? So if there are deadlines for the audit report, you want to check, like, okay, what was the deadline last year? What is the deadline this year? Is this something that we can meet up with? It's important for you to understand their deadlines. Then we have use of audit rotation testing and verification. The auditor may not carry out 100% of testing or verification on the client transaction or segment of the business. Where rotation testing or verification is adopted, it will be necessary to determine ahead of the date of the engagement which aspect of the business should be selected for testing or verification. An example of rotation should be applied to the branches visited. So they are saying that now that you have audited them before, you cannot keep doing the same thing and expect different results. So if possible, when you are subjecting things to sampling, be careful about resampling what you have sampled before. Rotation is like we have to form. When we go to current issues, we go to do that one. Okay. So rotation is just making sure that everything has an equal chance of being selected and that you avoid the selection of the exact same samples last year into this year. Are you with me? So we now have a document. That document is called the Audit Planning Memorandum. We have a document. That document is called what? The Audit Planning Memorandum. This Audit Planning Memorandum is supposed to have the desired objectives of an audit. Your audit planning memorandum is supposed to have the desired, is designed to achieve the desired objectives of your audit. So it has, it's like a paperwork, like a in practice, like a blue file. You understand? So that blue file will have things like, okay, what is our term of the engagement? What are the risky areas of this audit? Their assets and liabilities. Do they have an internal auditor? For this work, do we need a specialist? What approach are we using? The timetable. At week 2, we should be checking this. As at week 3, we should be checking this. The staffing requirements. Okay, we need 1 partner, 2 senior managers, 2 senior managers, 3 manager, 2 senior associates. You understand? The staffing requirements and then the fees. So those are what 9 things at a minimum that should be contained in your audit planning memorandum. Okay, so let's read it one by one. Terms of the engagement. In the case of a new engagement, the letter of engagement should be prepared as part of the overall plan of the audit. In subsequent visits, the letter of engagement should be reviewed in light of the current circumstance to ensure all aspects of the work undertaken for the client are covered in the letter, especially as they relate to taxation, accountancy, staff development, and executive search. Okay, so basically just trying to say, make sure your terms of audit covers the extent or circumstances involved in the work you have collected. Audit risk areas. The auditor also has to critically analyze all the high risks What is an executive search? An executive search is basically research that has been done by top management. Okay? Research either of the top management. So you are checking that what is the exact requirements in this case? What are the peculiarities of this management team and what do they exactly want from us? So as it relates to taxation, accounting, the level of their staff strength, what their, like the client company now, what they know, and your research on the management as well. So all those things aid your term of engagement with that client. Okay, all these risk areas. Now you are reviewing the high risk areas of that client. Example, whether they have competent staff, is very, very important. High risk areas can be on two levels. Is either something is risky because it is a small number of high transaction, or it is a large amount of transactions with small numbers. So high risk areas may relate to the nature of items. Example, provision is an high risk area because there is no standard on how your provision, is it your provision? It's my provision now. I'll just do justification for you. Okay? So they said, for example, cash for a retail establishment with numerous collection points and outdoor disbursement location. Cash and cash equivalents is a high risk area for them. Risks may also relate to a high probability of errors in the case of stocks whose quantity are subject to estimation or susceptible to pilferage. The risks may also relate to the structure of the organization, especially in the cases of joint ownership of an organization. Where the owners are not equally represented in the management, there is therefore the risk of withholding information from some directors. So this one are just example. It is not a hook, line, sinker that this is the way risk is. Like I told you, provision is also a risk area. Everything, so that this is not even saying that when you go and look at provisions, it depends. Again, that's why they'll tell you anything there, any audit procedure. When we get to audit procedures, any audit procedure you're writing, number one is obtain an understanding. Why? Because you don't know that client, you don't really know the peculiarities of his own operation. Everybody has the one that is doing them. So they talk about a retail company, cash is an high risk area. For a company that has that where their risk is in receivables. Another one, like for non-profits, where our risk is our expense. Yes, that's where the auditor spends a lot of time. So every industry, every client will have the peculiarities of their high risk areas. Okay. Number three, asset and liability. This will require detailed plan since they are of continuous relevance to the financial statement for many years, and relevant vouchers may not be readily accessible. The plan relating to assets should clearly disclose their history such that current movement may be easily determined and adequately verified. This will apply mainly to plans and long-term loans. So you're just basically trying to say that asset is something that is also, it doesn't change. It doesn't change last year and this year. So just make sure that your documentations are intact. If there's anything like disposal, how it's just basically how can you verify this? Your PPE schedule. And for your liabilities, documents that show that the entity is actually liable for this thing, and the signed agreement as to how the payments are supposed to go. Presence of an internal auditor. Wherever an internal auditor exists in an organization, the auditor should determine suitable plan to review the technical competence of the internal auditor, his degree of independence, the scope and quality of his work in order to determine the extent of reliance to be placed on his work, and identifies the areas of overlap. This is a very funny conversation because we will still talk about the internal auditor more and more and more. But this one is like profiling. You get somewhere, the auditor will just sit down with the internal auditor, just throw a few questions. They want to gauge him that so I don't know what he's doing. And basically, even when he's evaluating, before he even selects his audit approach, but this is also a planning memorandum. So at this point, he's still actually planning the audits. So based on his review and based on the kind of And based on the kind of reports that the internal auditor or you can make the internal auditor might not be one person. Let's say they're subjecting the head of the team now to this scrutiny, right? So based on the reports that the internal auditor has submitted, based on the what does it mean? Does it mean the external auditor evaluate the performance of the internal auditor? Yes, they do. They do, because that determines whether they can rely on the work that they do, the work they've done. Because if an entity, internal auditors ordinarily, the reason why they even set up the internal audit function, yes, it is to management so that they don't wait till the end of the FY to get a report. Somebody is giving them, in some organizations, monthly reports, quarterly reports, 6 months reports. Yeah. And the essence is that if there are some things that the external auditor will pick up, internal audits should have picked it. Yeah. So it is supposed to, they even use it to fasten external audits in real life. That's okay. We already have people that are checking our records. So when you come, there should not be so much to do and all of that. And then the external auditor comes and say, this is what these people are doing. We can't base our reliance on this and all of that. Or you can get somewhere the internal auditor has cleaned all the books. You will find error, you will find it back, because they have good guys. Some companies spend money on getting good guys that are checking the books and things like that. But external, like I said, in Nigeria, we don't even used to bother doing system based. I don't, at least from conversations I've had with people and all of that, we just do substantive tests. But in advanced world, they have some organizations that really place a lot of reliance on their internal audits, because it actually makes the work easier, you know. The next thing you want to text from your audit planning memorandum is, do I need a specialist? You are going to audit like an agro-based firm. And that's why you see that in the big fours, they started to also employ, like before it was okay, an accountant go and work in the big four. You have engineers, you have IT guys, you have different people. They even like to employ people that are in other industries that maybe they've now gone to get their ICAN and things like that, because he helps them in cases where they need a specialist, or who they call an expert. Who is an expert? An expert is a person that has knowledge in any other field apart from accounting and auditing that may be useful for the work. You just go and audit an agro-based client, you just, they wrote 10, 50 billion. You're wondering that, what's happening here? And then you're like, and that's the way we used to do it now, because you know that they do that they can bobo. When they get a specialist, somebody that understands the nature of their work, they'll be able to apply the work or the advice of the specialists in cases that will require his advice and all of that. So the way specialist works, the company can decide to provide, or based on the assurance firm, they may say that this is the way we work. We like providing our own specialists. So audit approach. Based on the review of the internal control, like I said, the auditor will be able to decide on the audit approach. This will be based on the extent of reliance to be placed on the internal control. The timetable is an important aspect of audit. The auditor should help to establish plans to ensure that for each year, the audit is completed within stated deadline. So the timetable is like a flow of work. Anybody that has seen an audit timetable before can go online, search what's an audit timetable supposed to look like. You see it. It just tells you what they should be doing at what time. And then the starting requirements is how much, the number of staff that are required for the audit. So because audit is basically being charged, the fees of audit is charged from time. So the way it works is that different people in an audit engagement, they have their hourly rate. So you can say, oh, my partner collects 300,000 for every hour he works on your work. So they'll have calculated this. So this partner now, he works 6 hours. The senior manager will work 10 hours. This person will work, is an estimate though, at the beginning. The normal manager will work 15 hours. The senior analyst or something will work 48 hours. I'm just using an example. So they would have like a staffing requirement with the timing that they expect that the auditor uses, the audit team will have to use on that work. So that will influence the fees. So based on the plans already established in terms of time, staff, and material, the auditor should plan his fees to cover salaries, overhead costs, and leave a significant margin of the partner's share of profits and pension scheme. The plan fees must be discussed with the clients, if not agreed. That's why people used to fight that what is in this textbook. Before we even start going far in real life, go don't say how much do you want to pay. Abi, you will do timetable, you come and give clients. Clients will say, this is what I have for this audit. Are you collecting it or not? So that's why people typically have issues, but standard your audit is based on time. Okay. So now we've talked about understanding the client's business. And then somebody's like, oh, you say you should understand the client's business, understand the client's business. How can I understand the client's business? I am not the client. How can I understand the business he is doing? The extent of knowledge gained about the client's industry and their organization, it affects the performance of an engagement staff. But you were not born with this knowledge. So you have to get to a point where you train yourself to be able to ask the right questions. And how does the auditor get this knowledge? Number one, it goes to the client side. They call it field work. Abi, you go to their sites, their operating base. You have conversations with their management. You ask the right questions. Number two, one of the requirements in an audit, if you have a entity that maybe they've audited you guys before, they will ask you for all your board meetings, they are the meetings that the board had, the minute of the meeting, the correspondence and everything. They will ask you for it. You are supposed to go through it. Somebody that is in practice is like, oh girl, make I sit down, they go through minute of meetings. So in practice and in theory, like I said, can be relatively different. Next up, you take their internal audit reports. So this is one of the ways that you are rating the auditor, the internal auditor. Why is this one right? But there's some things you see in the internal audit reports, you know that some ones they know what they are doing. No, Abi, you want to now read previous year's audit files and permanent audit files. That's why when it happens that you are not the one that audited the client in the previous financial year, more care is required. More care is required before you just assume the strategy that you want to use in auditing that client. So you go through the last year audit files. So audit files are like documentation. We'll talk about audit files in audit planning. So where you keep all the paperwork as relates to that client. So your audit files can either be temporary audit files or permanent audit files. Number 5, we have reading other materials within the firm, whether they have like management consultancy reports, feasibility reports. Then this 6th one is reading industry related materials, trade journals, investment analysis, or stockbroker reports. So at this point, I genuinely want to ask somebody that is in practice should tell us, do you people actually read investment analysis, trade journals, all of that? Don't worry, you don't need to say where you are working, just very political answer and I'm with you. Anybody?
So good evening, ma.
Good evening.
Yes, I am an auditor, but I don't work in an audit firm. Do you understand?
Okay.
So I don't read any trade journal. No, I don't. I face my work and you know, I do.
Because to be honest, like where is the time? Engagement, when we say they can put like 3 people. Abi? And God helps you, is now like a small audit firm. It's not the one with like even big audit firms. There's some engagements, they will put 4 people. You know, interesting times, to be honest. But thank you very much. I will not call your name. So anybody that did not look at the name, you will not know who you are. Who's using the chat? Anybody in accounting can work anywhere. That's one thing I've learned. If you are in finance and accounting, everybody can work anywhere. Hospital, church, hospitality, anywhere that they are doing numbers, an auditor can work there. Am I correct? As much as there's money involved, there's a need for an auditor. That's possibilities are endless, right? Like when I left school, I just knew that I did not want to do big four. So I knew I wanted to be chartered accountants. Yes, auditors can work in other places apart from audit firms. But if you are employed by a company, you are their internal auditor, you are a staff. But if you are employed by an assurance firm, you are seen as external. Although assurance firm even provide internal audit services for clients where they say that, okay, this person is on secondment, okay? And then you go to that client site as their internal auditor in quotes. So yeah, auditors can also work anywhere that they are counting money, that money numbers are involved, and you need somebody to do a second check on those things, you can engage the service of an auditor. Kayode has dragged auditors that, sincerely speaking, from personal experience, the questions they ask does not reflect them really. Auditor can come and say, you people, why do you people they can even say that, what's your they can see, auditors will ask you, they will stretch you. Somebody will say, they can tell you that yes, let me God. One time one auditor said that, why did we pay, like the amount we gave somebody for feeding is not justified because the person, the area was a local area, so why did you spend this luxurious amount of food? Like, we're like, I don't understand. This person gave you a voucher, gave you a receipt of how much is spent from the restaurant. The receipt is there, evidence of payment is there. You're telling us that the amount that he spent on the food does not justify how much, since the place was a remote area or it was not a city. Auditors will test you. So these people that are saying that, the question that they used to ask, if they really spend their time reading trade journals, that's not what they should be asking. And it does not even have industry knowledge. So I began to wonder if they even did briefing. It's not their fault, right? I have friends that are in the big four. Sometimes that meeting that they join, especially that initialization meeting, that meeting, sometimes they know about it 10 minutes to the call. Oh, you're on this engagement. They're like, because as they are doing that one, they are on like 3 different engagements. It is a lot. It is a lot. But let's just move on. So basically, that's how the auditor is supposed to know about the clients. And in auditor's defense, you are not there. That client has carried a transaction for 365 days. You are coming at the end of the FY. You need to ask questions, okay? And a lot of times, to be honest, some of those irrelevant questions they ask you, is their boss that asks them. They don't know. So their boss will not want to come and look stupid in your front. So you rather ask the junior to come and ask you. Okay, other significant factors is basically understanding your responsibility. You see, this one is very important because, we talk about expectation gap. You guys that done expectation gap. The public perception of audits and what it actually is not very far apart, but you have to check it because some people just believe that auditors are that they are into miracle, okay, whereas they're just checking what you said that you have done. So you want to be sure of your responsibilities. You want to be sure of the nature of the client's business, significant items. I always tell people, instead of trying to cram all these things. Just understand the chapter. See, treat your AAA as a conversation with an experienced auditor. Yes, that is where you should treat it. I'm not arguing with you. You know this thing, but me, this is what I read. This is what I understand. If you treat your AAA as a conversation, not just with any auditor, an experienced auditor, you will pass. If you sit down and you try to cram every acronym, every subheading, you will struggle, because this is just chapter 6. We are going to like chapter 14. One question can have something in chapter 1, then they move to chapter 7, then they move back to chapter 6. You need to understand the subject wholly. Okay? So here again, they came and talk about the internal control again. You want to understand the principal features of the client's accounting system, the effectiveness of their internal control, and which you will have gained from your preliminary understanding. Consideration of the above should enable the auditor in determining an appropriate strategy, which should be set out in writing in an audit strategy memorandum. So you can see the documents. We have talked about an audit planning memorandum, and now we're talking about an audit strategy memorandum. All these things, they're just templates. A lot of things in audits, they have standard wording. What does it mean for those who have standard wording? It doesn't typically change. You just, all of us are working online now. File, create a copy online, rename it to the name of that client. Abi, everybody move ahead. Control find and replace. Change everywhere that client is with the new name of the new client. You people will not say the truth now. Okay, everybody is doing on code. You do find and replace. Everywhere the name of that previous company is, you change it to this new company. Oh yeah, strategy memorandum today. So you move on. Surely if they are in the same industry, bank, work of sweet. Let's go to the previous bank, change everywhere that they put Wema, change it to Stanbic. Planning memorandum, strategy memorandum is already ready. Send it to your supervisor for review. You did not change this, but this figure was 5 million. For these people, it's 10 million. You now say, oh, sorry. You now go and look at the figures one by one. Change all the figures. You people now realize that, the date is, no. You see this work? It's God. It's God that will help everybody involved, but it's actually not an easy work because there are multiple engagements at the same time. So we said, however, the auditor should recognize strategy. If necessary, as a way of changing factors, it should be. Hey, it's my network. Oh, can you hear me? Hello.
We can hear you.
Hello.
We can hear you.
On the contrary, we can hear you.
Okay, maybe it's our network. Okay. So, basically, you should now, see, even then they wrote it here that whether it will change is depending on your review of the audit process, of the audit progress. For an existing client, the auditor should have much knowledge if he determines the auditor should have much of the knowledge he needs to determine his audit strategy in his audit files. Nevertheless, he should discuss with the client's management whether there have been any changes of the company's circumstances that might affect his audit approach. He should discuss with management. Why did they give him money? The external auditor is appointed to carry out audits in accordance with specific regulatory statutory requirements, such as CAMA, or in accordance with the generally accepted accounting auditing practice within the country concerned. In this circumstance, the terms and the conditions will not call for any special consideration when determining the audit strategy. Auditor, I'm just trying to tell you that the auditor is not working on his own. He acts based on regulatory framework. Okay. The auditor, however, considers the additional responsibilities arising from requests by management or because the client is required to conform with special regulatory or other requirements. Like, let's say you want to do a merger and acquisition and you want to do an audit. You may tell the auditor to highlight some particular things in that audit to aid the essence of the audit, which is the measure that is coming or something like that, or maybe like you want to even purchase another company, something like that. They came again. So this one is understanding the client's business. Then you now come again and familiarize yourself with the client's business. The author needs much knowledge of both the business of the client and the industry. how the clients operate, in what places, in what activities. I don't know how possible this is. You can, what I think this material is good, like this topic, you can select, you can put this material into Adobe, select it and make it play as audio. Yeah, you can do that. Yeah. Okay. The auditor needs to use reasonable knowledge of both the business of the client and the industry which the client operates, how and in what places the activities are carried, in addition to the basic information which he has obtained for the audit. In order to familiarize himself with the organization, he will read publications from the clients, such as their annual reports, their interim statements. He will read about the client's industry. He will have meetings with the client's management in order to identify major types of transactions. You will examine the client's internal documents. This one is just like what they set up. But this one now, let's say it's the generic kind of knowledge about the clients. But when it comes to familiarization with the client's business and organization, this is him trying to know them from an inside point of view. So he will sit down, he will go through their memorandum of association and their contracts and their lease, their minutes of meetings, their policy statement. If they do this for each client, it's only 4 people they will audit per year. By the time they are done, they will become the accountant of the client's company. Okay, so the auditor should tour the client's principal place of business. Do they have plants? Do they have factories? Do they have shop? Do they have offices? You should tour it. Then the auditor of a manufacturing concern, for instance, should take a tour of the company's factory so that he can know the production process. He can see the type of scrap, their manner of disposal, the way their finished product is, and in all of that concept. My author that will go there and say, okay, what do you please manufacture? Is it what I can carry you? Is it what I can carry you? You for manufacturing perfume. Oh, really good. When your auditor is doing stock count, you go and smell it. But that's why you have professional behavior. Don't act in a way that puts our profession at a disrepute. Don't act as if you have not seen perfume before. Okay? But yeah, we just want to say have adequate knowledge of the business. It will make the auditor to be able to determine whether the accounting and internal control system is appropriate. Such knowledge will now give the auditor an awareness of the physical realities behind the accounting records. I just think there was one time there was somebody that did an audit and he was saying that he was having a conversation with their CFO about the standard. And the CFO said, "What's that standard? What is it like? Standard what's only he said, when the CFO already tell him that which standard is that, he already know that there's no way we are moving forward from this." So he already know that these people will tell me that it is daybreak. I cannot believe it. I'll have to wake up and go outside again. Because if you're CFO, this is where he is in this knowledge. A key standard that affects you people in the preparation of a financial statement. Your CFO said which standard is that. Don't worry. God will help us. Such knowledge will also give the auditor an awareness of the physical realities behind the accounts. So like I said, it would have been good if you can all do system based because procedures, numbers respond to procedures, like I've said. Such knowledge will also give the auditor awareness of the physical realities behind the accounting controls and the financial statements which he examines, and it will enable him to consider their significance more intelligently. The auditor's task of familiarizing himself with the client's business and the organization will involve him spending additional time on the first audit of a new client. In construct, the need for him to spend additional time for this purpose on the audit for the second and subsequent years may be fairly. We have said this thing now time and time and time again. As he may need to have. Okay, I'm with you, Augusta.
Sorry, ma.
Unmute and
I
speak.
want,
Yeah.
I want to ask,
Yeah.
this system base, is it related to using like this QuickBooks, Sage, and the rest, like these softwares?
Yes, but yes. So it's just you will just be able to walk from paper to records. Like QuickBook is not as advanced, right? When it comes to accounting softwares, like Oracle, NetSuite, You understand? Like people, you can
Yeah,
check
I
for
don't use I
yeah.
just use QuickBook and Sage just like something just like example, but I know they are advanced ones. So I'm just asking,
Yeah.
can
So
we use
it's just working from this is how we do things to the paper. But for substantive test, it is working from the transactions to the rules that are outlined about that transaction. You understand? So ordinarily, you should work from what is your
okay.
procedure.
All right.
Okay, this is how we do
Thank
purchase of
you.
assets. You will now go and check all the assets that you purchase. Did you follow the procedure? But for substantive tests, if you go to the system, what are the assets that they purchase? Did they follow the procedure that they said they want to follow when assets are being purchased? So that's basically it. You can unmute and speak.
Okay.
Okay. Okay, so maybe what the last speaker meant to say is the word system. Does it connote software or connotes procedure, internal processes?
Okay, the word system connotes procedures, policies, and internal processes. Mm-hmm. Okay, your hands are still up, but I guess you are finished speaking.
Okay, can you
Okay.
hear me?
Yes,
I
I
want
can.
to. Please, sorry to ask. I was just curious. I know you're explaining some certain testing just now. Yeah, a detailed test is being done on the overall process. So, in that case, does it mean if a detailed test is being carried out in analysis, does it mean that the internal auditor doesn't mean they are not doing anything? They are not working because more often than not, we do see external auditors come to an organization to carry out an audit, and they end up bringing out so much debris. Where we have internal auditors, so does it mean the management are
Yeah.
just suppressing the internal auditors and that they are not
Mm-hmm.
doing anything? Does it mean the internal auditors are always at the mercy of the management? Like it gets me curious most of the time. So
Mm-hmm. So like I said, I think it's more about the system that exists. Like in Nigeria, even people that have internal audits is making no be say we no get, right? It is very dependent on how the internal auditors or the internal audit team is being perceived. I think there's one of the chapters that will talk about the issues that internal auditors also face. You know, the power of an internal auditor is reliant on the power that management gives him. Imagine an auditor saying that, oh, this thing we must not buy it, and then management still buys it. You understand?
yes,
Which is
yes,
what happens in a lot of organizations. So just like you said, in a lot of firms, either they are being suppressed or they are not enough.
okay.
Imagine having a group of company and having one internal audit team with 5 staff, and then you say they should come up with report every quarter, or most of the time said every end of the month. Omolomo, you just have templates. Is quite sad, right? But that's like accounting. Everybody, like as I am here like this now, tomorrow morning, I'm mentally thinking about the nine, like my to-do list. I already have 10 things on it. Is I don't even know what to say. But I don't know, something about our work just makes you have a lot of things to do at the same time. And I don't know why. So
Yeah,
I
okay.
can say I
One
for
of that,
one,
one of that
mm, I'm listening.
one of that curiosity is that I often hear people say, like I remember people say the internal auditors, like in some organization, they report directly to the board. So if in some organization internal auditor report directly to the board, why I don't know, they still have issues like what I said earlier, suppression from
Yeah.
management that they
Yeah,
can't.
so they report directly to the board, but they're not on payroll.
Of
Are
course
they
they
not on
are.
payroll? And
Yes.
the board, that's even one of the issues with corporate governance. Non-executive directors, executive directors, there's a beef. Executive directors feel like, okay, non-executive directors, we're not arguing that you don't have the required level of knowledge in this industry. We know that, for somebody to sit to sit on the board, right? They have some form of experience about that industry, and that's why that person is a non-executive director. But they are like, this is 2025. You were a part of the management of one company in 2001. Do you know how Tinubu is dealing with us in today's age and time? Do you understand? So some of the
Yeah.
advice that they give is sweet on book, but they're like, this is not the reality of the current day market. You understand? So
Yeah.
there's still that back and forth that you still get with the non-executive directors and the executive directors, right?
Yeah.
So imagine if, and which is what executive directors like to do, they like to be on the good side of the board. So if internal auditor said, don't even, if internal auditor has put something wrong in the report, the ED would rather have a offline conversation, Abby, with the board chair.
Of
Oh, this
course.
is what happened, oh, this is what happened, oh, this is what happened, Abby. The
Yes.
board chair will come to the meeting, he won't raise it. You get, he won't raise those matters.
Of course.
So even external audit reports, see, this is what I said, that you see this book and real life is very, very whoa. You need to just shall know this book or know it very well and pass. Because nobody will follow you and argue. This is what is standard to be done. Ah,
Okay.
okay,
Thank
where do we stop? Oh, where do we stop? So it's just very the however, the importance of the auditor updating his knowledge and his understanding about the client system before carrying out any audit test cannot be over. Even as small as noticing change in management. You see, this one is very, very important. Change in management. Your management changing can affect the style of work that you do. Yes. Your CFO changing, the client CFO changing can affect the kind of work to or the strategy or the plan that will be followed. So the nature of items on the account. Normally, the important factor in the determination of an audit strategy will be the review of the recent account and other available information in order to assess the relative significance of the items appearing on the balance sheets and on the profit or loss. So they're basically trying to say that what's supposed to influence your decision is the financial information. However, the auditor should obtain information on the nature and approximate volume of transaction, which results in significant account balance. The assessment will need to take into account any audit risks identified when analyzing the client's business. Those account balances which are considered significant can be subjected thereafter to only limited accounting procedure because you have checked them. So what is this what they're trying to say? In every organization, there are some like key factors that even influences the overall FS. So they are like, even from the entry point, you can decide to check those transactions, like start your check with those transactions that have like tendency to really affect the overall opinion or their material. They are very material to the overall FS. And then if you know you have checked them, you will now only subject yourself to limited checks later. Since I'm not in practice, I cannot confirm this, but I know that they don't used to do it. But maybe they do. I don't speak for I'm one man. Preliminary understanding of the system. In order to evaluate the potential for reliance on the internal control in respect of all significant matters, items on the FS, the auditor should gain preliminary understanding. You people, the amount of preliminary understanding that you write in AAA, just be ready. Of the principal features of the client accounting system to give rise to these items together with all related internal control. This involves the consideration of the method of and control over processing and the principal accounting record maintained for each transaction type. This preliminary understanding and evaluation of the potential for reliance on internal control should be documented, normally by the way of overview flow charts. So flowchart is they're just basically trying to say when you evaluate the internal control, you are supposed to say, okay, this is the way this thing flows. The request is being sent, this person approves, this person reapproves, this person check what has been approved, basically like drawing out. But that's why we have what we call a type 1 or a type 2 report. So a type 1 report is just an overview of the internal control system, while a type 2 report is a detailed breakdown that shows you the exact flow of internal control in an entity and how it moves. What do I want to say now? Moving on, we said this preliminary understanding and evaluation of the potential for reliance on internal control should be documented, normally by the way of flowchart. This preliminary evaluation, which is made for the purpose of determining the audit strategy, should be distinguished from the detailed evaluation using an internal control questionnaire. So what I'm basically trying to say is, like I said, to know about the entity, you have to ask questions. Okay, to know about the entity, you have to ask questions. And one of the ways that you can know about the entity is by using a, what do they call it now? Is by using a internal control questionnaire that just carries question about internal control, and they are supposed to answer those questions. Okay, the record of the accounting system prepared for the purpose of determining the audit strategy needs to be supplemented by a more detailed description of the accounting system if the auditor needs to carry out a detailed evaluation of the internal controls. However, it should generally prove adequate for the purpose of planning and performing substantive tests. The accounts because of the limited volume of transactions, and can audit more effectively through the application of substantive tests rather than relying on internal control. Examples of such accounts are their share capital, long-term debts, related share capital, long-term debts, related interest expense, investments, and other related income, except when large portfolios are held. In the same way, he may decide to ignore these internal controls entirely, either for reasons of efficiency or because the controls are not being operated, are not being operated properly, and then carry out an extended validation of the balance sheets. This is where they have substantive tests. So they're just basically trying to tell you that when you audit and you have some balances that you cannot just act based on them. You cannot act with them based on what management has told you about this record. What you do is to carry out detailed evaluation on these matters. Okay. So we have the example of such procedures are things like counting of your stock, reconciliation of bank balances, the establishment of provisions. See, these provisions is a major place. Provisions for doubtful debts. So they're just basically trying to say that when it comes to this kind of matters, you cannot rely on internal control on the number of stock that they have. Like you are relying on internal control reports that they say this is the number of things that they have in their store, and you say, okay, yes, this is what internal control said. That's not going to work, right? So we have documentation of the audit strategy. So it's important that we document audit strategy in what we call the audit strategy memorandum. So what are documents we're talking about? The audit planning memorandum. We talked about our what's the second one now? We talked about the audit strategy. Okay, the planning memorandum, the overall audit strategy, and then this audit strategy memorandum is still the audit planning memorandum. So it's just documenting like all those 9 things that we listed that should be properly documented here in terms of the engagement, risk areas, assets and liabilities, presence of internal auditor, the need for specialists, the audit approach, the timetable, the staffing requirements, fees. So everything, there's see anything that is not documented in our work in accounting is just gist. It's just gist between two people. Everything must be documented. So it's normally desired for documents for it to be documented, and in the first it should be prepared in the first year and reviewed after the first year. The auditor can obtain information as to changes that may be required as a result of his experience. The auditor may find it helpful to discuss the plan strategy with the clients, for example, to inform him of proposed reduction in the extent to which they will involve evaluation of internal audit procedures. In some cases, the client may wish such an evaluation to take place, and the auditor will need to explain that while he will want to comply, it will affect like the time they will spend on the audit, and it will increase their costs. The matter set out are those which would normally be relevant in determining the audit approach. So if anything sef, this is what you want to know, but it's very similar to what we have said. The client now, the assurance firm, is going to ask, make sure that all these things are being considered. So they said the matter set out below are those to which will normally be relevant and material in determining the audit approach, and which should be addressed in the audit strategy memorandum. Other matters will most certainly be relevant to particular audit clients and will need to be incorporated in the memorandum. So what are the matters? Is the engagement vary from what CAMA has said that you can take on? Does the report, does it include supplementary information? Do they want other form of reports from you apart from the generic audit reports? What are the risk areas? What is the number of accounting location for, like I said, they have different like subsidiaries and things like that. What is the balance sheet amount, the SOFP amount, and what is significant and not significant? What are the volume of transactions that are involved? What is our assessment of the internal control? What are the control objectives that we want to evaluate? Are there any particular levels of compliance tests that we need to perform? Compliance test is done to evaluate the level of internal control. Okay, we want to check the compliance with the internal control. Then, whether any detailed understanding of the accounting system is required, like how their process workflow is. Assessment of the potential for reliance on operational control. The potential, if any, for reliance on the work of the internal auditor. The approximate levels of substantive tests to be applied on each balances. Nobody will even sit down and ask you this in exam hall. We'll check past questions together though. The explanation of the approach in terms of the material profit and loss accounts, and whether there's any involvement, whether there is involvement by other auditors, that is in the case of a group audit. Or this is a very important point. You want to know, am I the only one that's going to audit you, or would another person come and audit as well? Then any other matter that the audit partner considers that may affect the strategy. Okay, so moving on, I'm talking about understanding the system and recording the system. So it's supposed to, at this point, you already know you're supposed to understand the client system, and what he is also supposed to do is that from the information he has gotten, he's supposed to be able to record the client system, like their internal control procedures, in a place as well. So as indicated in the auditing standard, the auditor's operational standards requires him to assess the adequacy of the client's accounting system, that okay, can they prepare financial statements, and you want to also assess whether the method that have been adopted can enable them to be able to prepare a financial statement. So yeah, all these things that are here, they're just the same thing. Recording the controls, evaluating the controls. After you've now prepared your flow charts, you will now have like a transaction walkthrough that okay, this is basically how we are supposed to check transactions from start to finish. But like I said, in practice, all these things are like things that the auditors have done time and time again. So they just work with the pre-available standard when it comes to work. So when it comes to evaluating internal control, he will do like a general test. I think this is where so the auditor must satisfy himself that the underlying books of record can be relied upon for the preparation of the financial statement, which is auditing. The auditor should therefore make a critical review of the systems of bookkeeping, accounting, and internal control. Those internal controls that are relevant to the expression for the audit opinion, uh, such as their internal, such as defined in their internal control, and basically evaluate those controls as well. So when he evaluates those controls, it now tells him to the extent which he can rely on the control. I've just been saying the same thing since. To govern the essence to which he will find the controls to be operating effectively. Now, the effectiveness of the disciplines over basic control will determine the auditor's ability to rely on confirming operations of the basic control and the extent to which they were carried out. So it's just saying that you have given me a textbook that this is how we work. I will choose general controls, like just supervisory controls that exist. If I see that you are not following your general supervisory controls, I know that you cannot follow basic controls. It just tells me that those basic controls will not be followed. So the basic controls are those controls that are built into the system, which operate all the time, and most of the time they are in all transactions. So typically things like reference numbers for your documents, control over like batch totals or routine reconciliations that you do. So if I cannot trust your general controls, I know that something will be wrong with your basic controls. So yeah, disciplines over basic controls. Disciplines over basic controls are controls that are established as check over basic controls, which operate occasionally or often as management may desire. Typical examples of this discipline over basic controls are management supervision and routine stock checks. The techniques employed to record and evaluate the system of accounting and internal control are usually one of the following. So there are three ways to record internal control of an entity. The use of narrative notes. That one is just pure wording, like a report on the internal control as at a particular date, or it may not even be as a particular date, just equity professional internal control is just narrative. We have this type of control. The acronym for internal control is PAPA MOSAS: personnel, arithmetic, what's the second piece of the first P is personnel. I think I've forgotten the next P. There's the next A is authorization and approval. M is management. O is organizational. S is segregation of duty. A is acknowledgement of performance. And then the last S is supervisory controls. Then you now have like budgetary controls as a standalone. Don't worry, it is AAA. Nobody will ask you types of internal control, like the types that I just listed now. So you can either use narrative notes or flowchart. Flowchart is just taking your narrative notes a step further. So instead of just using narrative notes, you now want to do a proper flow of what the controls are supposed to look like from this person to this person, from this person to this person. That is flow chart. Then the third one is when you have given the internal control questionnaire and they've answered the relevant questions, the completion of an internal control questionnaire that includes questions designed to establish what the system is and what questions relating to the evaluation of the control. So internal control questionnaire, you do yes and no, abi? So that tells you where they are. The actual technique used depends on the complexity of the client's record. So you can either say you want to use a narrative note, you want to use flow charts, or you want to use internal control questionnaire that has been filled by those clients. So we'll just stop our management letter into this class, and then when we come on Sunday, next week Sunday, we'll start analyzing the 4 approaches that we have. So just for your use, it will be good. Oh, the controls are even here as well. So it will be good if you can also like go through this. It's an easy read, if you are able to go through it in the course of the week, it helps us when we come to class. So what's the management letter? Like I said, we've already said it when we were explaining that when the auditor now evaluates the internal control and it does his test to check whether the internal controls are operating effectively, he is supposed to do a report communicating deficiencies in that internal control to management. So the report that he does, it is being contained in what we call a management letter. So he should report to clients on any internal control deficiencies that has come to his attention or on any other matter of operational nature which he considers relevant at this stage. If any additional matter comes up, what he can do is to also report to clients that, okay, this is what has come up. I think I need to make change. Either he makes changes or he the previous one will not be valid, and then the new management letter will now be valid. So basically, that management letter will have what all the deficiencies that he has noticed on their financial statements. Okay, so several possible audit strategies or approaches are available. So these are the 4 strategies that are available, which we'll look at in class. Let me just show you guys one diet like this. Audit approach, November 2021. Your review of the system and operation shows challenges with the internal control processes of your company. Based on this, prepare a brief on the meaning of deficiencies, which may need to be focused on as identified by ISA 265. The things to be included in the communication to the management on the internal control deficiencies. It's not even. Evaluate the strategies available, which an appropriate model will be selected for the application of it. So they're saying that what are all the strategies that you can use to audit this client? So this question, they were asking you to do what? To outline the 4 strategies. Then you tell them the one that cannot work, right? And then the most suitable in this case. But in this question, they already said that they had internal control failures. Okay. So for all those deficiencies, ISA 265, all those ones, will do it in evaluation and review. But this D question was specifically talking about all strategies or all the appropriate models that could be used to audit that client. So it was related to this chapter. Okay. It was not a long question. Somebody said that. Let me just read it. It's Well Bakery is a private limited liability company. It bakes bread and other confectionaries, which produces from the main bakery and another small bakery. in another part of town. The bakery's products are sold from the two bakeries and 5 other outlets in the same town. Those who sell the product to other neighboring towns are distributors who buy the product outright and bear the risk of sale or loss subsequently. The main administrative function and management of the bakeries are undertaken from the main bakery. The small bakery and the sales outlet keep some basic record of their activities. This record are transmitted to the main office every morning by the support staff in each location. Detailed accounting record are putting everything together to ascertain performances done at the main and administrative office. Though Eat Well Bakery is a private business, the chairman insisted on transparency using proper standards, ensuring that proper standards are maintained as he believes and shares the view that the bakery is competitive and is able to excel among competitors and remain relevant. The partner you work under and the chairman of the bakery met in a social gathering. After interaction between the two, the chairman decided to transfer the company audit to your firm. Professional clearance was sought and obtained by the predecessor of the auditor, but not much of other documentations were found to have been available. The partner knew the company to be a small one, but did not bother to do a detailed documentation when the audit started. You have come to continue from where the associates assigned to the task have reached to ensure that the expectation and confidence of the chairman is met. See that the answer, the question self does not even help you. This is what used to happen to students, and this was the number one question. They're like, what are they saying? What are they saying? What's this question? What are they asking me to do? So the first question was the objective of audits according to ISA 250. ISA 250 is audit planning. So the objective, the auditor's objective. Then the next one is prepare an outline of the matters that are to be communicated based on what you have seen. Some of these things you go find them, you find it cover to cover of your material is not there. It is, I don't even know how best to capture it. It is your openness to class. This one, they're just asking you that what are the things that you want to tell the chairman? How can they be transmitting documents in the morning? Do you know the amount of mago that will have happened in just one day? And them having the conciliation only in the administrative office. So this one is just basically you telling them the issues that they have. So deficiency is basically weaknesses in internal control. So we talk about it in ISA 265. And then the things to be communicated on deficiencies is similar to this big question. Then this is where the main question is, which is 12 marks. Okay. I'm coming.
Hello, ma.
Yes, I'm listening to you.
Hello. That
Yes,
means
I'm listening to you.
we need to know the standards of heart. So because if you don't know the standards, because those standards they are stating there now is not stated on the question. So if you are not familiar with the standard, you will not know where the question is coming from.
Yes, you have not done audit planning, so nobody will have told you that audit planning is ISA 250. And the same way, you've not done evaluation and review, so you will not have known that it is 265. However, most of the time, when they put it was just in this diet that it was not very clear. But in which part of this course have you captured audited objectives? Even if you use ISA 200, it may be correct. But yeah, like I get what you mean by okay, you have to know the standard. But I would say that for somebody that is writing 5 courses, yes, you can, when you are in class, pay attention to the standard. But if anything, when you open your AAA past material, they use one whole page to outline all the standards. It's just like your FR standards. You want to sit down with them and start listing them. So you can do anything that works for you, Sha, but familiarization like is the best way to remove stress from yourself. Like this question now, at a minimum, do it 3 times before you enter the exam. Or past question is it really helps. It really helps.